Okay, so here we are. We have got the Retracement Pip Catcher Indicator version 1.4, and I'm going to show you how you can get settings so that you get signals like these. Now, obviously, you're not going to win every single one. There's a losing one there, but then there's a winner, and then there are two other winners here. But I'm going to show you how you can get those depending on which pair and which time frame that you are working with. So first of all, what you want, you choose obviously the time frame that you trade on, and I'll show you. I trade on M1. I'm a scalper. I trade on M1, so I'm going to show you with M1 first of all, and then we'll go to a different time frame. And it will also depend on the pair as well, because different pairs move different amounts of pips. So the only thing that you really need to make sure you get right is the minimum trend size. Now, what this indicator does not do is simply count how many pips and think, oh, there must be a retracement coming. It looks at other things as well as the minimum trend size. So if we look at the minimum trend size here, if I leave it at, well, let's put it down to 5. It's ridiculously small even for M1. But then what you need to make sure you're on visual mode. You don't need a lot of data. But if we start that now, I'll put it onto candles and we'll get rid of the grid. We'll just let that go for a couple of days once it gets going. What's it doing? Is it working? Yes, there we go. So we'll do it. You see there are loads and loads of signals here. Now, what it's looking for now is reversals, which have got a minimum trend size, a minimum gap of, was it 5 we set it to? Yes, of 5 pips. So it's going to be looking for certain things to happen if the price moves in 5 pips. And if we look at that, okay, yeah, that's a pretty good signal because the other thing that I need to tell you is that these are, because it's a small retracement, we're not looking for big targets in amounts of pips. We're looking for small ones generally. And what you would look for, as you can see here, there's previous structure. So you're only looking to target previous structure minus any spread that you've got there. That's 0.2 pips. So here you'd enter, as soon as you get the signal, you enter. Stop loss goes 1 or 2 pips below the candle on M1. And then you're looking for, in this case here, you want to go just below that. So the actual pip target would have been only 0.7, 0.8. Okay, on this one here, there's your previous structure. Enter as soon as you get enter as soon as you get the signal. Stop loss would go underneath here, which is just about 1 pip for M1. Here's your previous structure for your target, 2.5 pips. So that's a 2 to 1. Again, here, there's your previous structure for your target, and you can sell from there. Again, you can see those are 2 nice ones here. This one here is a loser. That one's a nice one. There's your previous structure. I don't think it actually, does it actually come to you? Oh, yes, it does. Yeah, because there's your previous structure, really, isn't it? Even if you went down to there, it's still got it. And then this one here, here's your previous structure. I probably wouldn't try for that. That's a bit risky on a retracement like this, particularly as you can see it's in an uptrend. So there. So even on fire, this is what I wanted to show you. Right, so on 5 pips here, we can see there are quite a few losing signals. Okay, and that's because you haven't. There's another 2 losses, then 1 win, and then 1, 2, 3, 4, and then you don't get your win till the 5th one. So let's just change that to 13. Okay, and we'll run exactly the same again. Grid. And we'll let it run for a little while. Here we go. You can see far fewer signals now. Many fewer signals. Okay. And there we are. Right, so let's stop it there. So, okay. Now, okay, this is M1. So, where are we? Okay, so here again, now then, there's your previous structure, here's your signal. So that comes in and you get it all going all the way to previous structure. Your entry is here, your stop loss would be here. Now, depends how big a stop loss you might have got stopped out there, depending on where you'd put your stop loss. Otherwise, of course, you would have won about 1 to 5. Here, that one would have been stopped out. Okay, and then we go to here. Okay, that's a beautiful trade. You can easily see that. There's your previous structure for your target. Okay, so you enter here. Stop loss is about 2 pips, and your target there is about 8 pips. So that's a 4 to 1. And again, here, well, there you can see there's your previous structure, about 1.5 pips. I'd probably go to about here though. You see, it didn't make there, but so probably go to here. About, what's that, 3 bits to 1. This one here. Now, okay, there's your previous structure, and you want to be targeting. Can you see this here, where there's a wick there which it didn't break, and if we go back, there's some structure there. So I would have only taken it to about there. So again, about a 5 to 1. Okay, and again, that's a clear one easily. Okay, so that's how you set it. You just basically play with the pips of the minimum trend size. It can go more than that as well, but that's the minimum trend size. And of course, you can adjust the time of day that you want signals and where you want to send them. Now, if we then let's go to H1 and leave it on 13 pips. Now, it's pretty obvious what's going to happen, because 13 pips move on an H1 is not very much at all. So we'll let that run for a little bit and we'll have a look. Okay, let's skip it because it's going to take a while to. But you can see already that there are just loads of signals, loads of losing signals here. So on this one, I'd probably put it at actually probably about 112, I would think. Let's just have a look and see. That one, here we go. And let it get going. There we go. And we will just let it run for a while. See what we get. You can see again far fewer signals. Okay, let's stop it there. Go back to the beginning. Right. And we have a couple. There we go. So, there we go. Right. So you would be entering here. Your stop loss would be there, and then you're looking for previous structure. Now, where's previous structure? Well, there was resistance here. Okay, look, can you see that? There's support. There's resistance. So I wouldn't have taken this trade much past there. So you would have had about a 22 pip stop loss and a 30 pip take profit on both those trades. So they would have both been winners. But then, what time of day was that? That's 3 p.m. Okay. And then let's have a look. Here we get one loser because you would have entered here and got stopped out there. And then you would enter here. And now this is a difficult. I probably wouldn't have taken it past there because there's some resistance. What you must remember is this is an hour-long candle. So within this whole candle, there's a big trend. There is an up and a down trend. Well, it starts here, doesn't it? So it goes all the way up there and it comes all the way down there. So that's an upward trend in one candle on a lower time frame. So that is resistance. So I would have targeted here for that second one. So you would have lost one there, but then gained. So it's about 8 pips to there. So just under a 2 to 1. So you'd be in profit. There you go. So that's how you do it. Basically, you, depending on your time frame, obviously you will increase this for higher time frames, decrease it for lower time frames, and you'll adjust it for whichever pair you're on as well. Okay, please let me know if you have any problems, and I'll try and help you.